Hey there, Legal Pagers. Welcome to this episode of the Legal Page podcast. Today's episode is all about taxes and what small business owners need to know now more than ever during this current season we are in the future after COVID-19. I am very, very excited to welcome Wendy Barlin to the show today as our guest expert. Wendy helps digital entrepreneurs minimize their taxes and increase their profits. She's been in business for 25 plus years and has worked with thousands of entrepreneurs and business owners. Most recently, she wrote That's Deductible, which is a book about simple tips and tricks to find more business tax deductions. Wendy has experience working with diverse industries such as entertainment, professional services, hospitality, real estate, and medical groups. She is originally from South Africa, and after a year of traveling abroad, fell in love with Los Angeles and decided to make that her home. Wendy is a member of the AICPA and CALCPA societies. She is a certified accountant, and you guys, she has the most adorable accent that I could listen to all day. So let's get into this amazing Q&A with Wendy Barlin. Let's do this, Legal Pagers. You're listening to the Legal Page podcast, where we chat about life and business with a legal twist. I'm Paige, attorney and photographer helping online businesses and creatives tackle their business dreams without breaking out in hives. No more legal mumbo jumbo. This podcast features simple, bite-sized advice that'll have you legally legit in no time. Are you ready? Let's get started. Hey everyone. So thanks so much for tuning in today. As I mentioned in our intro, I am honored to have brought on certified accountant Wendy Barlin to the TLP podcast today, who is going to be talking all about taxes and most importantly, how COVID-19 and any loans that you've received during this time as a small business owner, what that impact is going to be on your business and taxes in the future. So Wendy, thank you so much for joining me.
Wonderful. Thank you to be here. I'm so excited. People want to talk about taxes.
Yeah, I feel the same way about legal stuff. You and I are both in the same boat. So, I mean, the Legal Page community is super wonderful because it's a bunch of small business owners that, want to get legally legit and also tax legit. So I would love it if you could introduce yourself here to everyone tuning in, tell them what you do and why you do it.
So I work with small business owners across the United States, and I've had my own business for 15 years now, and everything I know, I've taught myself. I've learned the hard way. And so what I teach my clients, what I'm teaching you, is everything that I've learned that works, so that I can save you the time and headache of all the mistakes I've made. And my real love is taxes because I have so many small business owners who have turned to Google or their neighbor for tax advice. And it just breaks my heart to see the garbage that comes out of all this misinformation in the world. Most of the people who approach me for help don't have a full-time tax consultant on their payroll to help them with this stuff. And so that's my real passion, is to be the person that small business owners can go to with these questions without judgment, without feeling stupid, just a safe place to get their questions answered to help them save money.
Oh, that's perfect. Yeah. I mean, everyone that I work with as well, small business owners just starting up a side hustle or trying to move away from their 9-to-5 W-2 world is what I like to call it, into, doing something that they're passionate about each and every day. And you totally hit the nail on the head there, where we're wearing all the hats, right? We don't have a human resource department. We don't have a legal department. We don't have a, tax, what is it? CLO, CEO? I don't know what the tax one is. But yeah, so it's definitely helpful to have a voice of truth in the tax world. And I'm very, very thankful that you are here to talk with everyone. So obviously the big hot topic right now is really COVID-19, small businesses, and taxes. So let's just get right into it. As you and everyone else in the United States knows, the CARES Act was signed into an effect. And it of course provided relief to taxpayers, individual taxpayers, and also small business owners in the form of the PPP program and the EIDL program. And I would love it if you could kind of just give your input on this program and how it has been rolled out for the past couple of months here.
Well, what we might talk about today might be different than tomorrow, and was certainly different than yesterday. It seems to be a rolling ball, that every day gathers speed and changes its direction. So what I will tell you is that a lot of my clients have applied for both of those plans and received the money. There is still money available. So if you haven't applied and you need to apply, you can still do that. Now the question more so is becoming, how do we get forgiveness? Because what was promised by the CARES Act was if you took this money and you used it for certain categories of expenses, you would not need to pay it back, which sounds a lot like free to me, and we all like free. Now what's coming out in the fine print is that maybe it's not as free as we thought. In fact, I've had some clients actually return the money because they would not be able to get it forgiven, or they didn't actually deserve it. And if you took it and you didn't deserve it, that is now a criminal offense. So I've had a lot of clients go, whoa, you know what? I got it, but I probably didn't need it, so I'm going to return it. But if you took it, then what we're working on now is helping clients ensure that they can get some or all of it forgiven, or that they're going to turn it into a cheaper loan that they will repay over time. I think it really comes down to, has your business been hurt by COVID-19? Do you need the money? And is this really going to help you get through the next 8 weeks?
Yeah, definitely. And for many people that I work for, it's just one solo person. So they had to wait for the EIDL loans to roll out, and then kind of those medium small businesses, larger small businesses is what I like to qualify them as. They received the money first, of course, and there was a lot of pushback surrounding that, as you probably saw in the news. Smashburger and Chris's Steakhouse gave money back as well, kind of what you're talking about. Maybe they didn't need it. Maybe they didn't deserve it. They got a lot of pushback for it. And they drowned the first EIDL and PPP loan account. So then, of course, the government went back in and refunded it and replenished it with more money. With specifically the PPP loan, because I know that's what a lot of solo small business owners and entrepreneurs were able to get money from. The EIDL loan really only let them get, about $1,000, if anything. But the PPP allowed them to kind of fund themselves for paycheck protection purposes on their own. So what is that looking like now? If you could just explain kind of this 8-week period, and then how people can apply for loan forgiveness, because that's kind of the name of the game here as these coming months occur. People want to make sure it's a grant, right?
Right, exactly. So I think the first thing to understand is that if you did apply for both the EIDL and the PPP, you cannot get both completely forgiven. The one offsets the other. So if you got EIDL money, it will offset the PPP money that will be forgiven. So there's already going to be a piece that you either have to pay back or will be converted to a long-term loan. Inside of that, on the PPP side, what you're looking at is paying for expenses that are designated as allowing you to get forgiveness. So things like office rent, telephones, utilities, paying yourself and or your people. But be careful here, because paying your team does not include independent contractors. And that's been a definition and a change in the law that came down the pipe in the last few weeks, was that you either have to pay your W-2 team members yourself, repay yourself, but you cannot use PPP money to pay your independent contractors and then hope to be forgiven. And I think for a lot of smaller solopreneurs, that came as a real shock, because that's where a lot of their money goes, is to contractors. So I have an Excel worksheet that I'm happy to send out to anybody that would like it, that will help you put all your forgiveness items on one worksheet. What's going to happen by way of logistics is that you will receive a forgiveness worksheet from your lender. And in fact, I had some clients receive theirs last Friday. This is an 11-page document. I don't know why it has to be 11 pages long, but it's a lot of work. So I'm happy to send anybody the Excel worksheet we've put together if that's helpful for you. I know that the forgiveness worksheet is extensive. And so if the money that you received is large and you really need help making sure that it's forgiven, I really recommend you reach out to your tax preparer and ask them to help you with it. Most of us are getting set up right now to help our clients get forgiveness because, in my opinion, having seen the form last week, I don't think most of my small businesses can make their way through completing those 11 pages by themselves.
Oh, that's so good to know and super helpful, you guys. I'll make sure that we link up Wendy's spreadsheet for everyone that might need a little bit extra help here when going through loan forgiveness situations. And yeah, I mean, really that type of information, it's not something that a lot of my community is aware of. And you know, guys, the main thing here to remember is there is a point at which you should seek out a CPA or, you know, expertise in the tax world. And you just might need to have a little bit more guidance on that and try not to do it all yourself. Because as Wendy's saying, like, you don't want to get into a situation where you tried to apply for loan forgiveness and then it didn't go through and now you're in a long-term loan situation. I know these loans are obviously quite a bit better. And people were advising, tax preparers and banks and such were advising people to get these loans because they obviously had a lower interest rate. The payback, process was a lot easier than just regular small business loans. But again, we're going back to everyone thought that it was a grant and that it was free money. Okay. So, and I think if you could clear this up for me, I believe the SBA also finally issued last week a form that kind of walks through what loan forgiveness is looking like as well. But you're saying that not just the SBA, but especially with the PPP program, because it was from independent loan lenders, it will be through the lender that you processed the application through. Is that correct?
Correct. And they actually put a deadline date on the form as well. So the one that I looked at last week had a deadline of October, which still gives my client plenty of time to get her documents together before October. And I'm sure that there are some people by their nature who are going to wait. But I would recommend, figure out what's going to be on that form and start gathering your data so you don't have any surprises.
Okay, perfect. So look for the form from your lender or the SBA if it was processed through there for like the EIDL loan or something along those lines, and then look for kind of the date that it's due by so that you can get all of these things together.
Correct.
Okay, so aside from the PPP and the EIDL loan, stimulus checks.
Yeah. Oh my goodness.
I think this is helpful, of course, to individuals across the U.S., but how is that going to work? I think people are just wondering, like, is it taxed? Do we report that money, or is it non-taxable?
So this is, I think, the one question that makes my head explode because I'm the consumer of a lot of podcasts, and I've heard so much misinformation out there. I was on ABC 7 News a couple of weeks ago, and that was the one question that all the presenters were asking me: is this taxable? It is absolutely not taxable. I'm going to say that again for anyone on this call. Please go and tell your family, your friends, everybody you know. The stimulus money you received as an individual taxpayer is not taxable.
Perfect.
And even better than that, if you did not get it, because I still have a lot of clients who didn't get it or they got the wrong amount. It's such a disaster. So if you did not get it because they sent a whole bunch of money to dead people, if you did not get it, you will still get it. So you're not going to get a check in the mail. If it didn't come, it's not coming. But when you file your 2020 tax return in March 2021, if you did not receive a stimulus check, but you were entitled to one, you will get a tax credit on your 2020 tax return. So two really critical things here. One, if you did get the stimulus payment, it's not taxable. And two, if you did not get it, you will get a tax credit on the next year tax return that you file.
Super helpful, super clear. You guys, listen to Wendy. She's telling you it straight to your face. This is what you need to know about that stimulus check. Very, very helpful to people right now, because I agree, there's tons of misinformation out there. So small business owners, obviously, and individuals for that matter, were given an extension on their tax filing deadlines for 2019 taxes. And you and I both know that people love delays, and especially entrepreneurs are oftentimes procrastinators. So there's a lot of people out there that are probably listening in who haven't quite yet finished their 2019 taxes. I think this also goes hand in hand with the fact that CPAs are inundated right now with all of these loan applications and things that they need to do for their clients. So they've pushed filing because the extension was there. What do entrepreneurs need to know about this? Should they wait till the deadline to submit? And how is that looking for, I think there's a difference with like the first quarter taxes that were due as well were pushed. Could you just explain that a little more to everybody?
Sure. So the first thing I would say is that if your tax preparer has told you they're too busy to help you right now, you need to get a new tax preparer. That is absolutely and undoubtedly a cop-out and not okay. There is absolutely no reason that your tax preparer shouldn't have the team and the available to help every single one of their clients with whatever it is they need right now. And so please don't let anybody tell you that. I highly recommend that if you don't know what you owe for 2019, you find out. Even though the payment is only due July 15th, the final deadline drop due payment for your 2019 taxes is July 15th, 2020. I need you to know what you owe. I want you to go to sleep at night knowing how much you owe. And I promise you, it's way less stressful to know that number than to bury your head in the sand and hope it goes away. I deal with so many small business owners who don't want to know how much they owe, but the stress of not knowing that number is really hurting them physically, emotionally, and mentally. I keep telling everybody, please figure out that number. Maybe it's actually less than you think, and you've wasted the last 3 months freaking out over a number.
That would be nice.
You're having nightmares about, right? So please, if you have not yet completed your 2019 tax returns, do so right away. And an accountant saying they're too busy is absolutely deplorable and not acceptable. What you want to do is figure out what you owe. You do not need to pay it until July 15th. But figure out what you owe. And then in terms of estimates, just to cover that piece, yes, this is what is called the tax snowstorm of 2020, because usually we pay our taxes in the first quarter and we pay our first estimate in the first quarter. Then in June, we pay our second estimate. Well, this year, there's like an avalanche of taxes because on July 15th, you will owe 2019 balance due and 2 quarters of 2020 estimates at the same time. So for business owners who haven't been implementing Profit First and who haven't put their taxes in a separate account, this is going to be a very stressful time. But please don't hide under your desk. It doesn't make it any better.
Yeah, that was as straightforward as I really wanted it to be for everybody. I had a conversation with my accountant last week, and we were talking about, how it is. It's going to be this avalanche on July 15th. So to really be prepared for that, and you guys, Profit First, if you haven't read it, obviously read it. But Wendy's a guru in it on what it means for, having those holding accounts with the money that you're going to be paying the government at some point in the future. It's especially with 2020, like you said, I just love this avalanche metaphor. It's true. They've pushed everything to July 15th. Small business owners are, notorious for procrastination. So if you do that, you could be in a really bad financial position come July, when we already have been in a very critical financial situation and hardships for the beginning of 2020 as well. So people are asking Wendy about double dipping. And I'm sure you've heard this quite a bit. And I think this is kind of the pivotal point in time right now, is people are coming off of unemployment. They've applied for unemployment. Maybe they've also applied for PPP or the EIDL loan, and they end up getting approved for all or some or just two of them. What do they need to know about if they should take the loans, or if they are on unemployment, can they end unemployment and take the loans? How is that working?
Yeah, I have to say, you need to look in the mirror and know who you are in terms of integrity. Will you get caught for taking everything? Maybe, I'm not sure. But I know that I don't want any of this stuff to come back and bite me a year from now when I make my $1 million and my business is soaring. So I think it's really a matter of personal integrity. I also think to protect yourself, you really need to have a plan for your business and a plan for your money. One of the critical pieces about all of this is to know what you need. So a PPP money or EIDL money is not going to solve your problem if your business is being obliterated by COVID and is unlikely to come back in the next year. Then 3 months worth of government money is not going to solve your problem. And so a lot of the conversations I've had over the last 3 months have been about, do you even need this money? And what's your plan for your business? Because I don't believe that we should just be grabbing whatever money we can get if we don't really have a plan for our business. Maybe the best plan is to shut your business down and take the unemployment and use the unemployment money, which is taxable, by the way, use the unemployment money to craft or design a new business over the next 3 months. If that's not the case, and you can see a path for your business to go back to being successful and profitable, then by all means, do not take unemployment and take the PPP and the EIDL and push your business forward. I really think it comes back to what are your goals and intentions and where are you going? And then let's get the money to fuel those, not get the money and then decide what to do next.
Yes. I'm like shaking my head over here. That is exactly what I would advise people as well, is unemployment is for that specific purpose. Like, you're unemployed, you're probably not going to go back to that job. I mean, essentially that's what it was created for, to keep you afloat until you get your next job. And people who have businesses are kind of using that as like a quasi loan right now, which is what the SBA and the government created these EIDL and PPP loans for, to keep you afloat so that your business survives after this. So I love that, looking in the mirror, what do you need, and only take what you actually do need at this critical time. So back to kind of, this was a pressing question in my Legal Page community on Facebook. People are wondering how they calculate taxes for 2020. So moving forward, like, let's, project March 2021, and we're looking at 2020 taxes. It's going to look a lot different than 2019. A lot of business owners that I work with had a flourishing 2019. And oftentimes that would trickle into how you're calculating quarterly payments for 2020. How can they really prepare themselves for a bad year, so to speak, in 2020 and calculate taxes appropriately? Do they need to continue with quarterly taxes? Can they wait to do annual taxes? What would you suggest?
That is the question of the day. In fact, before I hopped on this call with you today, that's what I was doing for clients, is looking at their first 4 months of 2020 and trying to do a tax projection. It is tricky. So there's several factors. First of all, for some people, income and profits, taxable income is down. Not everybody. Some of my clients are doing better this year than last year. So depending if you are affected or not, but let's assume you are, and that your revenue and your profitability is lower than last year. we can definitely do the calculations to see what you will actually owe for the quarter based on the tax rates that we know right now. But the other spanner in the works is we're in an election year. And if everything gets upended in the last quarter of the year, which we saw a few years ago when the Obama administration came in, and then when Trump came in, every time we have a switch of power, we have a tax change, significant tax change. And I remember on December 25th, a few years ago, getting updates on Obamacare that affected everybody's taxes for the entire year. So I'm telling people that any planning they can do this year is going to be very, very soft. And what I recommend to help you sleep at night, to help me sleep at night, we're using the tax law that we have today to do the best calculations we can do. But then we are making sure that we pad that tax savings account with an extra couple of percent just for the what if fluctuations that may or may not happen over the balance of this year. And I don't think that these calculations should be done with any of you should do these calculations with a pencil. I think two things to summarize. One, if you are risk averse, and you never, ever, ever want to pay $1 in penalty to the government, then use your 2019 estimates, even if they're higher than what they need to be, because then you will not owe a penalty for underpayment. If you prefer to take the risk and pay less this year because you know you'll likely owe less, then I highly recommend you get a tax preparer to work with you and pay the consulting fee, a couple of $100, whatever it's going to be, for them to run actual tax projections for you every quarter before you pay in your estimate, so that you pay an actual amount due and not a crazy out of the thumb number. What you pay your tax preparer should more than save you money.
Yeah, couldn't agree more there. When I got a tax preparer, that saved my little patootie, and it should save all of yours too. That couple $100, like Wendy was saying, is definitely something you should invest into, especially when all of this is kind of over your head. You know, that's when you know it's time to get some expertise and help in this tax area. Wendy, just to clarify here, because I've had a couple questions myself on this. People have paid quarterly taxes for, say, the past few years. And this year it's looking like potentially they aren't going to be, they're having a bad year. They're not going to be paying as much. Can they move to annual taxes and forego quarterly payments?
It depends on what their revenue is going to be and what their revenue is for the prior year. The way tax law is written now, you are absolved from penalty and can pay annually if you pay 110% of last year's taxes. Now, again, given COVID and the situation in our economy, I kind of have a feeling that a lot of these laws are going to change, just because there are going to be so many people who really are going to be unable to make their 2020 estimates based on 2019 income. They're physically unable to make it. And so I think there's going to be a lot of leniency within the IRS in terms of those penalties and interest. But I would say my always suggestion is to keep up your estimated payments, no matter how small they are. It's a good discipline, and it helps keep you focused on your tax money all year long, so that you can't bury it and say, oh, it's annual, I won't think about this till next March.
Perfect. Yep. That's a really, really good answer on that front. Okay, my biggest question, and I know I've had a few that I say, oh, this is such an important question, but this one is kind of the name of the game for my specific niche. I lawyer and help people and give legal suggestions to people in the wedding industry, the wedding and event industry. And what they have realized is now they've taken a good hard look at not only their contracts, but the big thing is their funds. Like, what do they have in their business account for money? And they're starting to think, okay, I'm having refunds and chargeback issues like crazy these past few months. And I've already used deposits or retainer payments that were made in 2019, because people, of course, book out weddings usually, 6 to 12 months in advance or more. So
Right.
my big question is, would it be wise, and you're a profit first person, so I have a feeling I'm going to know your answer, but people are wondering about holding accounts. Is this going to kind of be what everyone should do moving forward? With refunds and issues with cash flow, people, like I said, they've already used what retainers have been paid in 2019. So should they keep those retainer fees in holding accounts until the wedding services are fully completed? And then just to follow that up, people are wondering about reporting retainers. If they do start putting them in holding accounts, do they wait to report those then until the wedding took place and they move it from their holding account to like their operating business account?
Yes, I work with a lot of clients also in the event space. And I'll tell you that about 30% of them have closed up shop and said, I'm done. I cannot hang on another year for this to go away. I'm not interested in doing Zoom or online type events. I'm done. And they're going to go and look for other opportunities. The balance of my clients have very successfully been able to offer a service to events online and sending packages. And they've come up with some fantastic creative ways to do business differently and in some ways even better. So I think when it comes to the cash, 100% you refund those deposits. I don't care what your legal agreement says. Who do you want to be a year from now? And that's what I told my clients. When the dust settles a year from now and people come back for services, who do you want to be? How do you want to be remembered? Do you want to be the person that said, I can't give you your refund back? No, sorry, my legal letter says I don't have to. Goodbye. Is that who you want to be? Because that's not who I want to be. I want to be the person that says, we're all in this together. Don't you love that phrase? We're all in this together. I'm going to give you your money back. Even though it hurts me, I'm going to do it. And if that means you have to put it on a credit card or take a loan, yes, you need to give them their money back for your reputation and for your business and for good karma. But that being said, in terms of when you take in money, absolutely, it should go into a trust account and it should not be touched until the day of the event. The only time you would use that money is to pay vendors that you have to pay, right, to put on the event. So if you are subcontracting and you need to pay vendors, then of course you can use that money. But otherwise, absolutely, we put it into a separate account and we don't touch it. Whether it's taxable or not kind of depends how you file your tax return. Are you a cash basis taxpayer, an accrual basis taxpayer? And so that's where you need to work with your tax preparer to see your specific situation, but we don't spend money that we haven't yet earned.
Right, exactly. So yeah, make sure, and especially, not just event hosts. I say probably 75% of the people that I work with are photographers or videographers. And so they are, let's say it's a $5,000 contract. Okay. So they made it in 2019. 50% of that was a retainer, so $2,500. Usually they would report that right away. This is kind of the old way of doing things. Right. They would report that right away in 2019, and then they'd probably use it. It just went into their business operating account. My suggestion moving forward, and obviously you agree with this, is, I think the biggest financial lesson we can learn from all of this is get yourself a trust account, a holding account for your business in terms of retainer payments. You need to have a completely separate one for profit first methods, right, for taxes, but this is primarily for retainers. And then you need to have access to that, liquidity to be able to refund in these situations. Now, you and I kind of differ a little bit on our opinions regarding legal documents and non-refundable retainers and keeping businesses afloat. And everyone that's probably tuning into this podcast knows my philosophy on that. I actually do agree that you should stick to the letter of your contract. That's why contracts are in place to begin with. And a lot of, like I said, photographers as a whole, I think event professionals like hosts of large conferences and stuff are in a different position. And I agree with that. But photographers, there's a lot of ways you can postpone, you can reschedule, you can use that retainer payments for credit for future services. So there's ways to, of course, ensure that it is a non-refundable retainer. But just wrapping this back up, holding accounts, retainer fees, probably put them in holding accounts moving forward.
Absolutely. And I respect your legal opinion. I really find that this is what I enjoy about what we do is everybody has an opinion. And I think it's really important for us as advisors to always know who our clients are and know where to guide them in what's best for them. And I tell people that most of the discussions that I have are not really about taxes. They come into my office wanting to talk taxes, but what we actually end up talking about is risk. And how much risk they're willing to take and what their plans are and how their life works. And tax is actually a small piece. And I get the same feeling from you that so much of what we do is really beyond the reason that people call us in the first place. And so I always tell people, really one of the most important things you can do is know who you are when you come into working with any professional in any relationship so that we can help guide you to who you are. I don't want anyone to do what I tell them to do. I mean, I kind of like them to, but nobody does. I would rather know who people are and guide them to the best result for them.
Exactly. And there's no one size fits all solution for everyone. As I've been navigating through this COVID season, I'm looking at various contracts. I've probably looked at thousands of different contracts, and everyone has different contract language. Sometimes it's nuanced, where, refundability is probably in your future. Unfortunately, sometimes it is a little bit more lock and key where the non-refundable retainers are pretty set in stone, and you should be able to work with your clients on utilizing that for future services. But again, that's probably a completely different discussion. I just wanted to hit on the fact that respectfully, I probably disagree just a little bit. But yeah, I mean, you and I, the name of the game here is always what type of business owner are you trying to be? What have you set up in place for yourself as existing contracts? Maybe you need to take a good look in the mirror, like you said, and okay, maybe my contract isn't as good as I wanted it to be. And so for all of these purposes, legal purposes, tax purposes, I should probably update that for the future and update holding accounts for retainers, so on and so forth. My next question is about like LLCs and S corporations. I think this is a biggie for some people who, like you said, were doing really well in 2019. I think it was a very booming year for many businesses. And so they were looking at self-employment taxes. And you could also, if you wanted to, kind of start out with like the various taxes people have to file. And then when you move to, you still are an LLC, of course, for registrability in your state purposes and for legal purposes, but then you designate as an S corporation through the IRS. And people were doing that at the beginning of 2020, obviously before the end of February, beginning of March hit. And people are like, oh, it's going to be such a good year again. Hopefully it still is for all of you tuning in. But if S corporation status necessarily hasn't come down, because it's a little bit delayed right now from the IRS, obviously they have bigger fish to fry. When should they start using a monthly payroll service for themselves? And let's just boil this down to solo business owners here. So they are only paying themselves. They maybe have some contractors, but they don't have employees. They filed in 2020 as an S Corp. When should they start doing monthly payroll for themselves to avoid kind of that additional self-employment tax purpose, like issues there?
Yeah, that's a really common question. And there's so much misinformation on the web about that.
Yes.
So the IRS law actually says, I'm going to save you 4 years of college here. The IRS law actually says the owner of an S corporation needs to issue themselves a reasonable salary. That's what it says. Reasonable salary. That is extremely broad. I've never seen an audit on the reasonability of salary alone. I've seen people get audited for something else, and then the government will say, well, geez, that salary seems crazy low. What game are you playing? Reasonable salary is what we're aiming for here. And what that means to you is that it does not have to be weekly, bi-weekly, monthly, like when you were an employee. There is no requirement about the frequency of the salary. The requirement is that it is reasonable in amount. So in my mind, what I consider reasonable, if you have losses in your business, so if you run your profit and loss report, and we're going to divert into, if there's anybody on this call or anybody listening who does not have a professional bookkeeper, you need to get one. You need to get a professional bookkeeper before you spend money on anything else in your business. It is absolutely like building your house of brick and not of straw. But that being said, I cover a huge chapter on that in my book because it's my one pet peeve. But let's assume you have professional bookkeeping and you look at your profit and loss statement at the end of the month. If you have losses, there is no requirement to issue yourself a salary. I see so many people come into my office and they've been running themselves salaries and they have losses. Why would you run yourself a salary and pay in Social Security and Medicare taxes when you didn't even make any money? So please hear this. When you look at your P&L for the month, if you have a loss or a very small profit, don't run yourself a salary. Salaries are meant to be reasonable as they relate to the profitability of the business. So as your business is profitable, then you can look at the reasonability factor. How I do it is I actually run myself a salary only in December. And I know it's going to freak you out. I run about 250 S Corps for my clients. And through the Profit First system, we set the money aside and we have it ready to go. But we don't actually run the real salary until December. And the reason for that, most of our businesses fluctuate. And if you run a really big salary in May or June or July, pay in your Social Security and Medicare taxes, you could come to the end of the year and find that you've actually paid yourself way more than would be considered reasonable under the law. And now you're not getting those Social Security and Medicare taxes back. So it becomes both a strategy thing and a cash flow thing. And so again, I'm so sorry. I know this doesn't sound like an easy check the box done thing, and it's not. When you take on the responsibility of an S corporation, this is what you're taking on. And this is why I tell people when you move from an LLC to an S corporation, yes, I can save you taxes. And yes, we could be more aggressive on our expenses, but it's going to cost you more money because you need to work with a professional to make sure it's done correctly.
Yes. I don't think anyone that I've talked to has said that as well as you have. Really, seriously, you guys, don't take an S corporation lightly. There is just like the people are throwing information out there. And I think especially in entrepreneur world, we're all like, how can we make more money? How can we avoid self-employment taxes? Those type of things come up as business owners. I get it. But an S corporation is more challenging. You know, we just moved to one as the legal page too, but I was very, very careful. I have a bookkeeper who does my, monthly P&Ls. I also have an accountant. And last year, it just wasn't in the cards. They were like, you're kind of at this, like, you're right at this crux of whether, filing as an LLC that has pass-through taxes that just go under Schedule C versus an S corporation, the benefit really wasn't there. But this year it definitely was. And there's many ways to do this. Like Wendy's saying, my eyes got really wide when you were saying, oh, we only file it in December. I was like, that's a thought. I could do that too, which makes sense because even my business fluctuates from month to month. We have set up, a monthly payroll system just for consistency purposes. And again, that's who are you as a business owner? What do you want to do? For me, it was just monthly budgeting, personal finance issues. I just wanted to make sure that I had a reasonable amount coming in every month that I could use for my personal finances. And then business finances have been much easier to manage because of that. So there's various ways to do it. Good to know on S corporation things. And I think moving forward too for 2021, 2022, something everybody needs to consider when they're looking for that separation in how they're designating their business profits. All right. Final question here. I think this is a good one to end on. And you're probably going to be like, this differs because I've had this question many times. So if a photographer lives in Wisconsin, but shoots in Minnesota or other states around Wisconsin, how do they properly file sales taxes? So some people like split sessions or services across 2 states. How do they know, like, are they filing in their own county where the bulk of the work is done? Are they filing sales taxes in where those images are being delivered to your clients, maybe in another state? I know there's probably not an easy answer to this, but what would you suggest for people to help find this answer?
I don't know anything about sales tax. I think you know what you know and know what you don't know. And I'll tell you, I don't know anything about sales tax. People on my team do it, and we use software like Sales Tax Jar. But what I can tell you from an income tax point of view and a business planning point of view is that every state has a minimum you need to earn in that state before you're required to file. So from a income tax and a tax planning point of view, what I do is I have my clients keep track of what they're earning in each state. And then we look at each state's filing requirement. Some states are high, some states are low, some states are zero. We don't care. Make $1, you're going to pay for it. And so depending on the state, we decide which states to then file income tax returns on. And that's when things get extremely complicated. So again, that's where you really need help above and beyond Google or QuickBooks to tell you the answer.
Yeah, I mean, you couldn't have answered that any better because it's complicated, you guys. That's the answer.
That is the answer. And I think for all of us, the lesson is know what you know and know what you don't know. I'm a real stickler about staying in my lane. And I'm always telling my clients, like, stay in your lane, do what you do well, and let other people consult on the areas that they do well.
Exactly. Yeah. I'm not going to be doing any like trusts or estates anytime soon because that's not my niche of the law. Right. But for sales tax purposes, you guys, and this has come up so many times when I've gone to conferences and, done speaking on these, types of things, is people always want to know this question. And this is when you need to get a tax accountant and preparer to help you manage this, especially if you're like an elopement photographer who shoots in various states. Wendy's saying, there might be income tax implications there. There's definitely sales tax implications. I know and sales taxes are changing drastically. The one thing I will note on this is the laws of taxes. Like Wendy said, they change from year to year. And what I have seen kind of as the general trajectory across the board is states are starting to realize that businesses are going online. And so in-person sales tax is going down. And they are starting to tax digital goods. And so, I know there's some states that do it for like photographer, digital file purposes, and there's some states who aren't. So that is where you need to work with a sales tax niche accountant that can help you navigate that because it is complicated. So awesome. This was such a good episode, Wendy. Thank you so much. Before we end, I always like to kind of just do a little fun rapid fire question and answer. So let's get started. Drum roll, please. What is your favorite beverage?
I love iced tea with a splash of lemonade. I know you think that's strange, but I'm from South Africa and we'd never had iced tea with lemonade in it. So when I came to America, I was like, oh, what is this? This is awesome.
On Arnold Palmer, I love it. What is your favorite munchie food?
Oh, I would say my favorite munchie food is popcorn.
Yum. Love me some popcorn. Right? You guys, if you don't know.
That comes in little 100-calorie bags that are guilt-free.
Yes, munchie. You can munchie your way through the entire day on that. What is your favorite movie or TV show?
I am a huge fan of all my Netflix series. Right now I'm watching Dead to Me.
But it's so good.
I know, right? I don't have an all-time favorite. I am like my favorite now. And my favorite now is Dead to Me. I'm binge watching it. So
Oh, it's so good. My mom got me hooked on it. It's so good. My mom and uncle were like, go watch Dead to Me. Go watch Dead to Me. Yeah, it's a guilty pleasure, you guys. Go get it on Netflix. What is the type of music that you listen to most often?
Okay, this is going to date me, but I still love my 80s rock.
Yes. And what is the funniest thing that has happened to you recently?
Oh, I hope it's not horribly embarrassing. I decided I should use Instagram. I've used Facebook, I've used LinkedIn. I decided I should use Instagram. So my daughter, who's 13, set up an account for me. And I went to do a speaking engagement just like this on Zoom. I put my phone next to me, took some photos, was posting on Instagram. When I was done, I saw all these positive likes and comments. I was so excited. Oh, I'm a hit. And I go downstairs, and my daughter's mom, you were posting on my Instagram account? Mortifying. So I have now been banned from Instagram.
You were posting on my account. I love it. I love it. Seriously, you're making me laugh out loud because all of us probably tuning in are like Instagram crazy gurus. But right? So I have had a situation where I post on the wrong account and I'm like, crap, delete.
She's like, well, at your age, stick to Facebook.
Oh, God, love her. All right. Well, Wendy, where can people find you if they have more questions or they need that? I'll make sure you guys, I'll link in the show notes, Wendy's Excel worksheet for you all to download. But if you have any, other questions, where can they find you? Where are you at most often on the internet?
Love it. Not on Instagram. You will find me on my website at aboutprofit.com. Profit with an F, aboutprofit.com. You can schedule free consultations with me right there on the website. My goal is really to serve the small business community. And so I have a certain amount of time set aside every day to just help. So you're welcome to grab me for any questions you might have on my website. And then my book called That's Deductible is on Amazon. And it's really about taxes for the small business owner. And I think it will answer a lot of your questions and perhaps point you in the right direction.
Wonderful. Well, like I said, you guys, I'll give you easy access to all of that and make sure that you can find Wendy and her book and all of her resources. Wendy, thank you again so much for jumping on this podcast and giving your time to us today. I know it was so helpful to so many listening.
You're most welcome. Thank you, everybody.
Thanks so much for listening to this episode of the Legal Paige podcast. See, I told you being legally legit isn't so scary. Be sure to visit thelegalpage.com for all show notes. And it would be super awesome if you could head over to iTunes and leave a review. Last but not least, don't forget to join my free Facebook group for unlimited legal and biz Q&A. Chat soon, Legal Pagers.